Welcome to Java. It's March 6th, 2025, and it is also Thursday. Thank you so much for joining me and being here. We've got some massive moves happening in the markets this morning. Some things that are expected and some things that aren't, but it's causing some major ripples and waves. We've got a lot to go over, so let's get started. As always, with our favorite factors here, our MMRI is still down for the moment. Greg is working on that. However, we've got the elements of it. The 10-year yield is rising now. It's 4.3, up slightly from yesterday, but it's going to be the bond market in general that I speak about today and the main driver. Now, at the moment, we've got the relative strength of the dollar is falling. So we've got some calls on this being the end for the US dollar dominance, which is very interesting, will affect everything from not just trade, but also going forward. So with the market itself, let's start with the fear greed meter. We are in extreme territory right now of fear. So I want to shift over and looking at how the markets appear to be opening, ironically in the green. Now, there's a few reasons for this, and we're going to go over this. We've got some major distortions happening and also some kind of odd twists in this tail this morning. So, the big thing that I want to pay attention to right now is the VIX. So, the volatility index, and this is puts on the market expectations that it's going down, is up at 8.16% as I'm doing this. Okay. We've got gold is retracing back away from that $3,000 level, which I was speaking about. Now, normally in a high volatility market, you're going to see gold rise. So this is interesting factor in itself. We've got oil up on specific news, but also watching energy long term. So with all of this, we've got the markets are looking like they will turn a bit later today. They are weakening as we speak. Now, with this, we've got cryptocurrencies back up over 90,000. Bitcoin's at 91,352 right now. This has some of its own factors going in. We're also going to speak about this crypto summit coming up. Now, the daily driver for these markets right now is fear, but we've also got a shift because of easy money coming in. Now, looking at that easy money coming in, it's starting first in Europe. So we're going to be discussing the bond markets with this dollar dominance. Jobless numbers are coming in. We're getting this boost on easy money due to defense spending. And the job numbers that came in yesterday, the claims jobless numbers, 77,000. They were expecting 141,000. So less companies hiring. There's going to be more unemployment down the road, not too far from here. And we've been talking about this for a while. So Bitcoin surging with this cryptocurrency. The White House summit is coming. I believe it's tomorrow on the 7th. Now we've got Dow, S&P, and the Nasdaq. This says giving back their gains under the uncertainty. We've got the European Central Bank will be making their rate decision. It's expected that they're going to cut. And we've got this jobless claims data ahead, the big one on Friday. But looking at the market today, the calendar, we've got the initial jobless claims prior to market open. We're looking at our trade deficits, a couple of Fed presidents, of course, to kind of smooth things out. And then tomorrow morning is going to be the large report coming out prior to market open, the US jobs report. So, and then with that, the unemployment rate. Now, shifting over, China is doing very well right now in their stock markets. We know the real economy is also disconnected. However, with all of this, we've got Alibaba launched a rival to the artificial intelligence. So their stock is rising. Now, there is also, because China has announced easy money coming out there as well. So China announcing a high-tech fund to grow artificial intelligence and emerging industries. So much like the United States has promised to kind of plow money into these directed sectors, if you will. Now, this is One-off story, but just in case you're looking at the stocks for these, shares of Starlink's European competitor tripling because they're saying that they can basically cover for the coverage in Ukraine since they're being dropped by the United States. Now, as I was saying, European Central Bank expected to cut their interest rates as traders are piling into Fed easing bets. Now, this is across the board. Now, I want to speak about the bond market in general. This morning kind of blew up, and this is on the German bond market. They have said that they are literally going to spend, quote unquote, whatever it takes, unquote. So, whatever it takes, open wallet, blank check, basically, this caused a spike. Now, why would they do this? They are holding European Union Defense Summit and the leaders to hold an emergency meeting on support for Ukraine. This is because the United States has ended their support now. I believe this is largely political play in order to get Zelensky to give the United States what they want. However, this has kind of thrown the burden on the shoulders to continue on Europe, Western Europe, as they see this. So they are scrambling in order to fund this, Germany being the top of this since they're at their debt bottom. Now, in light of all of this, the same effect as when the United States got all of the easy money and the Fed rate cuts, the market surged. So we've got European markets up, but their bond yields are surging. Now, Germany's bond yields are now the highest they've been since late 1990s, and it is causing some chaos and turmoil in the markets. Now, very quietly in the background, I would also like to mention that Japan, their rates also are skyrocketing. So between the two, it's causing some serious chaos. So this is a marker for this global bond sell-off as Germany jolts the markets. Now, this is because, as we were saying, but it's also across the Eurozone and Japan. So they're kind of being very quiet about that portion of it because it's not easily explained as to why Japan's would spike at the same time. Now, this all plays back into the end of the dollar dominance because there are some major shifts going on. As I said, a lot of this is to push towards cryptocurrency. Now, CBDC, and I'll speak a little more about that in a moment. Now, back to Alibaba, they're saying that soared 7%, not just on the artificial intelligence, but also China pledged to vigorously boost spending. So their stock market also jumping. So with those two markets going up, there will be weakness with the US market this morning. Now we've got Peter Schiff. He is our notorious gold bug here, warning of the United States recession risk. Now, yes, he is known for loving gold and hating Bitcoin. However, he does have a very solid hold on what is going on with the economy and the central banks behind it and the moves that they're making. So he's saying the warning of this recession risk as Japanese bond yields hit their 15-year high and the German bond sell-off triggering this market shock. Now, I put this in here because Peter Schiff is one of the few others that I have seen that is also speaking of these two together as a combined shock that we're seeing this morning. Now, going into what is coming, and this is all a setup. It's all a setup to come into the CBDC. We are having this cryptocurrency summit. Who has been invited? Well, Ripple CEO Brad Garlinghouse, as well as Strategy, formerly MicroStrategy, Michael Saylor. Now, they're just some of the ones that were invited. Now, I just want to bring this out because Tether, USDT, just froze 28 million of USDT on a Russian crypto exchange, Garantex. Now, their reasoning is that it's being laundered. Doesn't matter. Part of a sanction, it doesn't matter the reason. The underlying point I want to make here is that they do have this ability to do this. This is completely programmed currency that they are using and pushing us into as well for a very good reason. Now, this is pushing also globally. So tether freezing this at their whim. And I want you to just consider this for the long term consequence of what this could have. Now, we've also got Solana co founder saying that a federally controlled crypto reserve will harm decentralization ethos, proposing that states should control their own reserves. I agree with this, but this is more than the surface story about the crypto reserve. But it's cryptocurrencies or CBDCs in general that states should control their own, because if they do not, then they've lost this control they're handing up to the federal government. Now, we've got one other thing that I would like to bring up, and this is Bionexus stock pops. Now, this is an independent private company, but they have embraced an Ethereum-focused treasury strategy. And what has happened here is this medical tech company has basically announced the adoption of Ethereum as treasury reserve asset for their company. Now that they have done this, their stock is rising. So we are moving away from the stock bond split of the past and moving into cryptocurrencies as being held as portion of the assets. We've been talking about this happening for a long time, even as they're speaking about in general, they used to hold 10% in precious metals. Now they're talking about 2% in cryptocurrencies. If they begin to do this, there's massive upside into the cryptocurrencies they choose. Now, Bitcoin being at the level it is at resistance at this moment. I believe there should be one more pullback. Doesn't have to happen. We don't know. But that would be definitely a buying opportunity. We are already in this recession, and these are just the tremors that we're seeing to the next level of what's happening. So, with all of this, I wish you all a wonderful trading day, and good luck to you all until I see you again. Stay free.